off the chat. So welcome everyone to TFX's webinar on pensions and other retirement accounts outside the US. So what we're going to do, we'll go ahead and get started through these slides. And yeah, basically it's an opportunity to, I'll introduce myself, and then I'll talk about the agenda, what we're going to talk about today, and get through some, let's say, basic awareness about foreign pensions, and then we'll leave some time for some Q&A. So my name is Andrew Coleman. I'm a CPA, and I've been a CPA since 2008, and I have about 15 years of experience in accounting and tax and consulting, and all my clients are individual clients living in the US, living all over the world, and my focus is on tax preparation for expats. I also review tax returns, and I also do consultations. And with TFX, you can, if you, for example, you need some consultation, we offer those consultations as well. So to be able to talk for half an hour or talk for an hour about something more technical. So yeah, and as well, I'm also an expat myself, so I fully know what what it's like to be an expat. I've been an expat for about 10 years, so I'm not only an expat, but I'm also doing taxes for expats. And so just to keep going, I'd like to just talk briefly about TFX. We are the top rated tax service for both expats and people living in the US. And we have, as you can see on the slides, we have quite a few CPAs, 80 plus CPAs. We just have a lot of experience when it comes to expat tax returns. So, if you sign up with TFX, you're going to work directly with a CPA, and yeah, you might have a unique situation, but we have a vast amount of experience, and we most likely have seen that situation. So that combined experience that we have, you wouldn't need to worry. We will be there answering your questions, and that combined experience really, we have seen a lot of scenarios. So that experience really is part of our one of our advantages. Not only do you work directly with a CPA and communicate, and that CPA is signing your return, but you also get, we have a vast amount of experience. So let's keep going. So like I said, what we're going to do is, here's the agenda for the webinar. We're going to talk about pension types, get through some basic terminology, common terms that I'll be using throughout the webinar, and then we'll talk about the taxation of foreign pensions, and then we'll get into the double taxation. So that's always a topic that is important to understand when you live abroad and you have a foreign pension. Are you this idea of double taxation we'll get into, and then we'll talk about the reporting of foreign pension income. So and then we'll get to a Q&A at the end where everybody can provide provide your questions, and then a few of us from our team will be answering those questions, and then I'll answer a few questions as well at the tail end. So I think what we'll do is, we'll get into the presentation. So basically what what this first one is, just to understand what are the common retirement types are. Retirement income can, as you're familiar with Social Security, that is one type of retirement income. The other types of pension items that you may be familiar with are employer or occupational type pensions. As well, you might have come across a private or individual pension where you're living, so not necessarily connected with your employer, but it's still opportunity for you to start a, say, an individual pension. And then if you're also probably familiar with the terms 401k and an IRA from the US. So a lot of expats still have or contribute to 401ks through a US employer or through an IRA. So yeah, those are the, and we'll get into those, mainly those, the pensions and the IRAs in this webinar. So, and so another thing I wanted to mention, when we talk about retirement and pension, just some terms that to be familiar with. Contribution, if you get a paycheck from your work, a part of that contribution is an employer contribution. They may or may not contribute, but there typically is an employer contribution, and then there's an employee contribution. So there's you're thinking about your pension, there's from a contribution standpoint, there's the employer, and then there's the employee making contributions. And then another term that we always, that you'll hear in this webinar is distribution. So there can be regular distribution when you retire in the country where you live. Maybe there's a certain age or there's a certain vesting time period, and then you can start taking distributions. So that's predominantly what we're talking about when we say distribution from a pension. You can also have an early distribution, of course. That's if you need or if you're allowed to take an early distribution. We'll mention that later in the slides. And then there's a term called pension growth or earnings. So your pension is as you make contributions to it, it's hopefully and having earnings inside the pension fund itself. So whenever we use the term growth or earnings, that's just income that that is being earned within the pension. So yeah, those are just some preliminary and basic terms that we use when it comes to talking about pensions. So some of the issues that you can come across, these are meant to just have questions that you might be thinking about or arising that are important from a US tax point of view. Here we're going to be focusing on your US taxation on a pension. So for example, have you started receiving pension distributions? Have the contributions been taxed abroad? Is there a treaty? A treaty is an income tax treaty. Most countries have these. You won't need to worry about that, and we'll be reviewing. That's our job, to review all of those treaties in each country that where you live, or wherever the source of retirement income that you receive. We'll take care of all that, so you don't need to worry about you reading the tax treaty. That's something that your CPA will handle for you. That's so yeah. And these are just some just general questions that you might run into. I think so. There is a poll that just popped up, and I'll let everybody take take a little bit to fill that out. The one question, have you filed your return? You can answer that. And the second one, are you delinquent? There is a really good program that we do a lot for our clients, is the streamlined procedure. We have a lot of experience with the streamlined procedure. So if you feel that you're behind on your tax returns, we'll help you get caught up. So it's a good program to use, that streamlined procedure. And then, yeah, so we'll let everybody finish that poll. Just to give a few more seconds here so everybody can yeah. Okay, I think let's keep going then. I think everybody had some time to answer that first poll question. So what we're going to do now is just talk briefly about taxation of foreign pension, U.S. taxation of foreign pension. So in this, so basically there was one. This first slide is talking about our pension distributions from a foreign country taxable in the U.S. And this is mainly for you to know is that most foreign pension plans are subject to U.S. taxation. So there are factors that come into play, like in your local jurisdiction or the local country where you're at, how that's treated there is also important for the U.S. tax treatment. But ultimately, it depends on the treaty and other factors. And that's where, foreign pension everybody has to deal with it at some point, and it can be complex, but we will be here to help you with, getting into the treaty to determine the U.S. taxation. So yeah, it's just mainly for you to know is that foreign pension plans are subject to U.S. taxation. Whether you owe U.S. taxes on that that's a different story. But just the general premise here is that the foreign pension plans are subject to U.S. taxation. And like I said, we'll be reviewing all of that and looking at the treaty and other factors. Have you paid taxes on that foreign distribution? So that's where we'll come in with the analysis and calculation as part of your tax return. So another aspect of the taxation is foreign pension contributions. Employer contributions, as I had mentioned previously in that terminology and that term sheet, that term slide, employer contributions to the foreign pension fund increase your U.S. taxable income. And that's generally. Now, there's always exceptions. Some countries have exceptions where you don't have to include the employer's contributions. But if you think about employer contributions, it's a benefit that you're getting. The employer is contributing to your pension, and that benefit creates taxable income. So and that's a general statement. So like I said, there are certain countries where that's not taxable, but just for you to know generally, that's why it's important to distinguish between employer contributions and employee contributions. So, and ultimately, again, it depends on the tax treaty, the income tax treaty between your country and the U.S. So ultimately, we'll handle all this for you. We will take care of that, and you will be in good hands, and we'll make sure that your U.S. tax return is, shows this employer contributions on your tax return. But that's just to give you an overview about the employer contributions. There's also, like I mentioned before, the taxation of, there's some growth or earnings inside the pension fund. And with certain US qualified pensions, the income accrues tax-free. So for some countries where there's certain treaty provisions that talks about this, the growth it accrues tax-free, so you don't need to include the earnings in your tax return. And this is an area where the tax treaty really comes into play and is a big part of determining, what is the taxation on it, if there is one. Some countries don't have a tax treaty, and those are, each country is unique, of course, but we have, our team has worked with most of the countries, if not all, in the world. So we are very familiar with, this is our bread and butter when it comes to, determining what is taxable and what is not taxable, so that you don't need to worry about all these details of the, is it going to be taxable? We will prepare the return, and we can have a discussion, and you'll see it in your return. But ultimately, just for you to know some background about the taxation of it, it comes from mostly the tax treaty, if there is one. And we'll do all the analysis, to determine what's the right amount to include. And then another factor in the taxation is the distributions. Eventually, when you retire, you'll get distributions from your pension fund. So those, most pension plan distributions are subject to US taxation. Now, there's going to be an analysis. Most of the time there should be and will be an analysis to determine what is your US taxable portion. And that kind of gets into, we'll of course take care of that. But just for you to know, generally, the distribution that you receive in your local country might not be the same amount for US tax, for your US tax return. There's a whole host of, there's an analysis that goes behind the US taxation of a pension distribution. Sometimes it's not needed, but most of the time there is, because ultimately we are, in preparing your return under US tax rules and regulations, and we're making sure that your return is accurate, as well as making sure that you get all the benefits that you're allowed as a US citizen or green card holder on your tax return. So ultimately it does depend on treaty and other factors, but we'll handle that calculation for you. But just for you to know, yeah, the pension distributions, most foreign pension distributions are subject to US taxation. So yeah, one other interesting area, sometimes we come across this a lot, is rollovers for foreign pensions. A lot of, and what is a rollover? It's a transfer of funds from one pension plan to another. So it is it might be treated as a taxable event if you take one pension and then extract that, take it out, and then transfer it over to another foreign pension account. It could be a taxable event. So if you're thinking about doing that, always contact your CPA or advisor before you do that. We can either have a consultation to discuss, hey, I'm retiring. Before I file my tax return, I'd like to do a consultation to understand, hey, am I going to be subject to taxes on if I just want to transfer from an underperforming fund into a better performing fund? Some people might just not think about the U.S. tax implications of that, but we can always talk before you do that, or if we're preparing your tax return, and we'll, you send us a message in email, chat, or we can always go on the phone to talk. We can have that conversation before you make a transfer, because there are some countries that allow that U.S. tax allow a rollover between foreign pension distributions, and allow meaning it's not taxable. But in general, for you to know, is that that's just one thing to be familiar with, is the rollover. So yeah, we can move forward, but I just wanted to mention that as well. Another area that is always a question about is, can I contribute to an IRA in the US? And you can contribute to a US retirement account. So that's general for you to know. Now, of course, there's unique situations. There's sometimes there's rules around, can you have a brokerage account while being abroad? That's a common question, and that's not really tax specific questions. From a US tax point of view, many of our clients, and just as a general rule, you can contribute to an IRA. So if you have an old retirement account back in the US and you're living abroad, you can contribute to an IRA. That said, one of the common issues that comes across is you have to have earned income to make contributions to a pension, to a US retirement account. So a common issue with an IRA, because there's limitations, as maybe you're familiar with limitations on IRAs, but it can, if all your income is excluded, for example, in the foreign earned income exclusion, all your salary, for example, it's very difficult to contribute to an IRA. It's not impossible, but it requires some optimization on your tax return, because if you don't do the optimization, you can have penalties for excess contributions. And those excess contributions, if there's a penalty, you have to deal with not only the penalty for that year, but it can continue on until you withdraw that excess contribution. So again, it definitely is similar to what I talked about on the rollover, is that before you start to make or think about making contributions, it's always good to have a discussion with your with the TFX CPA or advisor, whoever's preparing your tax return, and we will advise you as we're preparing the tax return, can you make the contribution or not? And you have until April 15th of the next year, after the year that we're preparing the return for, to make a contribution. So there's a window to make a contribution related to the previous year. So that's always advisable when it comes to IRAs, is that especially if you're using the foreign earned income exclusion, just so we can optimize your return and make sure you don't have any penalties on your return for the current year and for the following years. So yeah, if you're also familiar with pension withdrawals, at some point in time, when you retire, you want to take money out of the 401k from your old employment in the US, or an IRA. it's just you being familiar with that the idea that that the IRS may withhold income taxes on early 401k distributions. Typically, if you're younger than 59 and a half, there will be not only withholding income tax, but there's also could be a penalty for early withdrawals. Once you reach 59 and a half, then there typically isn't a 10.5 or 10% early withdrawal penalty. If you do take an early withdrawal and there is a penalty, there can be exceptions to those. There was, there's exceptions pop up sometimes every year. During COVID, there was an exception to the 10% early withdrawal. That was in 1 year, but that hasn't kept going for each year, 21, 22. So that might come up again each year, but that's just something that we will, we'll take care of that. You don't have to worry about that. We will help you make sure that if an exception applies to an early withdrawal, we will look at all those options for you. So you don't need to worry about that. But this is just for you to be familiar with, for anybody who's thinking about taking a distribution from their U.S. pension. Let's see. Another area that we wanted to mention is double taxation, and how to avoid it. So this is really a I hope everybody can, yeah, we're back on. Sorry about that, everybody. So basically what I was talking about in this, I wanted to mention one thing is double taxation. So basically with this slide, it's talking about there's ways to make sure you're not subject to double taxation. Either it's claiming a foreign tax credit, or using an income tax treaty between the foreign country where you live and the U.S. However, TFX will do this. This is our job. We're here to help you with making sure that there is no double taxation on those foreign pension distributions. So, and in fact, you can see a recent webinar on double taxation. We have those. We have other webinars available. So there's definitely it's an important part of the tax return process to make sure, we're going to ask questions from you. Are you paying taxes on those foreign pension distributions? So yeah, that's an important part. But yeah, foreign tax credit and the income tax treaty are things that we will use and review to make sure that you're not subject to double taxation on the same income. And so another area the last area that I wanted to mention is just the reporting requirements. So basically, reporting requirements, as everyone knows, you file Form 1040, and that's where that's your tax return, where you'll include your employer contributions that we mentioned before and distributions from foreign pensions. So that all needs to be reflected on your Form 1040. But there's another part of foreign pensions that it's a very important part of the tax return, that the Form 8938, if if you're not familiar with that. And the FBAR, this FinCEN Form 114, this is known as the FBAR. Maybe the FBAR is a acronym or a term that most of you are familiar with. If you're not familiar with these are forms that are reporting your foreign bank accounts, the highest balance of the foreign bank accounts, investment accounts, and foreign pensions. So if you're filing an FBAR and you have a foreign pension, if you're required to file that, having more than 10,000 US dollars across all your accounts, you will you'll need to make sure you include the foreign pension balance, the highest balance, on those forms. So the 8938 is part of your tax return that's filed with the IRS. The FBAR is filed separately with the US Treasury Department. So those are, just for you to be generally familiar with the notion that your foreign pensions need to be reported on those forms. So not just your bank accounts or your stock portfolio that you have abroad, but also foreign pensions need to be reported. So that's an important part of the reporting requirements. So yeah, that's and just for you to know too, that this is not about taxation on the reporting on that 8938 and the FBAR. It's a information about the highest balance of the foreign pension. So it's the tax return is where you report the income from the pension, like we talked about, the employer contributions, if they are taxable, that's where we'll report them. But these 89, this financial reporting of the 8938, these are just reporting your highest balances, letting the IRS know how much the account has in it at the highest point for each account. So that was basically what I wanted to get through on the reporting requirements for foreign pensions. That was basically what we wanted to introduce you to pensions, just to kind of get familiar with the terms as you either think about retiring or are retired, things that you should be aware of. And again, a lot of this is just to be familiar with. Your CPA that you work with TFX, we will take care of you and take care of the analysis and take care of the reviewing the tax treaty. So you don't need to worry about all the taxation and this, the details of looking at the tax treaty. We'll take care of all that for you. And this slide is just a reminder on upcoming deadlines in the fall. So September 15th is a deadline for if you have partnerships and S corporations. October 15th is the deadline if you had an extension on your personal tax return. So it's for October 15th is for individuals to file their 1040, as well as the FBAR. FBAR is automatically extended until October 15th. As an expat, everyone should be aware, or if you're not aware, when you live abroad on April 15th, you get 2 months automatic. You get a 2-month automatic extension to file your 1040 by June 15th. So your extension as an expat is due by June 15th, and then it gets extended till October 15th still. So those are just some deadlines. October 15th is the main deadline for individuals for their those who have extended their tax return. So those are just some important deadlines coming up. yeah, this is just to remind you that TFX is not only working with expats, we are working with clients in the US. So if you have pension distributions and you're living in the US, we will, this is including those situations as well. So we're not just, just focused on expats. We are including people who are living in we prepared tax returns for people living in the US. So, and I think another, if as you are thinking about your tax return, maybe, you've prepared it on your own. Maybe you have, you've used a service where you don't know the person, who's preparing your tax return, or you haven't met them, or you're not familiar with them. We have a top-notch group of CPAs who are going to be preparing your tax return. So, and you'll have, you'll be in direct contact with your CPA, and you'll get we have a peer review process to make sure that it's just part of our process, is to make sure it's fully optimized for all the credits and deductions that you're allowed to get. So, again, if you feel like you have a unique situation that maybe nobody has seen, there's a high likelihood that we have seen that situation because of all the vast experience that we do have with our 80+ team of CPAs. So we have a huge knowledge base when it comes to expats. So we are the top experts when it comes to this area. So highly recommend to reach out if you have some other questions. If you're want to get connected with TFX, highly recommend to use TFX because great team, and it's one of the top-notch service providers in this area, and technology is great too. So so I would say, I think what the last things that I wanted to mention, a couple things before we get into the Q&A. Instead of we like to give our money back to our clients. So instead of using spending our money on the marketing budget, we like to give it back to you, our clients. So if you refer a friend, you get a $25 credit, and your friend will receive a $25 credit too, and that's for each friend. So the more friends that you refer, the more you save. So that's an important part of spreading the word on TFX, that you get to save money if you refer a friend. So please share with your friends if you can, and you'll get to save some money. And what else? So I think now we're going to start the Q&A. I think there's been there was one more poll before we get into that. You'll see one final poll pop up on your screen. How did you find this webinar? You can answer that, and you can also give us a hint on an area that you'd be interested for us to cover in another webinar. So just you can provide your responses there, and I think what we'll do at this time is look at some Q&As. I think there's been some posted already, quite a bit. Let's see here. Ooh, here's a really good question. I'm gonna, one of these questions is, foreign retirement as pooled investments with underlying funds count as PFIC? Great question. PFIC. PFIC is, if for those of you who are not familiar with the term PFIC, it's a passive foreign investment company. Basically, those are very complex investments for expats. Anybody familiar with that term? Basically, a PFIC is a passive foreign investment company. It's basically a mutual fund, and it's a valid question about foreign retirements. If the pooled investment is within a pension account, the general rule is you don't have to file Form 8621. But I say that as a general rule because there are so many aspects that that come out of that. In that foreign local jurisdiction, we need to analyze whether we need to basically analyze it, make sure, because there are always exceptions to that general rule, as you maybe are familiar with. But the general rule is that if you do have pooled investment within a retirement account, you don't need to file Form 8621. That's a passive foreign investment company fund. But that is a general statement. When it comes to the details and looking at your unique situation, we always have to, the final answer really will come down to when we file your tax return. But it's a really good question about PFICs, because those are complex indeed. Yeah. Let's see, what else is there? Oh my, there's a lot of people I can see that there's a lot of people from the UK. We have a lot of clients living in the UK. So we have tons of experience with UK retirement account distributions, including, what else is there? So there's an interesting question about there's some of these, let's see here. Yeah, let me see here. What else? This is an interesting question. Here's a good one. And they're all great, actually. Gosh. Will investments in stocks in foreign accounts need to be detailed to the IRS, not owned by myself, but the company? That's an interesting question. Stocks in foreign accounts, not owned by myself, but the company, need to be detailed to the IRS. This comes down to, for example, so the question is, will investments in stocks in foreign accounts, not owned by myself, but my company, need to be detailed to the IRS, need to be filed with the IRS? And an example, that's a great question. With the FBAR, you'll recall there's different sections of the FBAR where it asks for financial ownership. Do you have financial ownership, or do you have signature authority? So those different types of ownership structures. So if you have signature authority over the account, you need to report it. So if you have investments in stocks that are owned by your company, but if you have some sort of signature authority, you still need to report it. If you don't have signature authority, you wouldn't need to report that. But that's just something that we'll definitely want to get through to make when we prepare the tax return, to make sure that we ask you all the right questions. And then once we get into those details, then we'll make that final assessment of whether that investment vehicle that's owned by a company needs to be reported on your tax return. I think there's questions that can be, let's see here. So I think David is answering one of the questions about how much will it be subject to tax on a foreign distribution. Here's a good question. My wife is an NRA. Will her pension plan need to be reported in my tax forms? So my wife is an NRA. NRA refers to a non-resident alien, so non-resident alien spouse. Will her pension plan need to be reported on my tax forms? Great question. If you don't have access to her pension, you don't have signature authority over that, then you don't need to report it. That's her pension plan. So that's not something that needs to be reported on your personal tax return. So if you're married filing separately, for example, and you're married to an NRA or your non-resident alien spouse has a foreign pension plan that's only in her name, it's her pension plan, then you do not need to report that on the 1040, any distributions from it. You don't need to report it on the FBAR, like I mentioned before, or that 8938. So that is, yeah. So it's a really good question. Yeah, if you were filing jointly, that would be a different story. Sometimes people, if you're married to a non-resident alien, but your spouse has elected to be treated as a U.S. person, that is a different story. That's a very different story, because if you're married filing joint and you're electing your wife to be treated as a U.S. person for U.S. tax purposes, then his or her pension plan will be subject to U.S. taxation. So if it's an NRA with you're not including your spouse on your tax return with the I-10, with an international individual taxpayer identity number, an I-10, or an old Social Security number. If you're not including your spouse on your tax return, then you don't need to include that pension plan on your tax forms. Let me see. There was one other, I think another question popped up. Yeah, there was one question. So yeah, there was a question here. The Irish taxes are higher than U.S. taxes on my U.S.-based IRA distributions. If I pay the U.S. tax on the distributions in full, do I have to pay the difference on my Irish tax return? Great question. There can be cases where you need to tell your foreign tax advisor, if you have one, about tax credits in that foreign country. So it can go the other way. If you have taxes that you've paid on your U.S. tax return, those U.S. taxes might be offset, you'd need to discuss with your local tax advisor about getting a tax credit, foreign tax credit, on your local foreign tax return for any U.S. taxes that you've paid on if the income is subject to Ireland, for example, that retirement account IRA distribution, if that's subject to taxes in Ireland, you would want to talk with your Irish tax advisor about getting a foreign tax credit from your U.S. tax return. So kind of the opposite of what we've been talking about, but a very important question about double taxation and understanding the tax treaty, but from a local point of view, your Irish tax advisor would help you with all that. Yeah. So I think what I just want to say, I think we're at the end here. I just want to say thank you to everybody thank you to everybody for taking the time to join the webinar. It was, it was great that you spent the time to join us today. And like I said, if you need help with your tax return, we are here to help you. So you can contact us anytime, any day, and we will connect you with a tax advisor, a CPA, and we can either get you started helping you with your tax returns that you have filed over the previous years, but need a more personal service, or if you need to catch up on your filings, we'll get you caught up. Either way, you'll be in great hands with TFX. And yeah, I think we'll go ahead and end the webinar. But thank you again for everybody for joining today. Yeah, have a great rest of your day or evening wherever you are out there. And we'll see you again on another webinar. All right.